Ah, shit. Ah, okay, welcome, beautiful people. This is Vestrado. Welcome to our live webinar today, whichever part of the world you're joining us from. I'm Atomashi Dania, Vestrado's Global Market Analyst. Okay, welcome, beautiful people. It's great to have you here, South Africa, whichever part. We have 4 people joining us on board right now. Welcome. Great to have you. Okay. We've waited a bit, so we're just going to go right into it and probably wait up for other people to join us up on this. Maybe one more minute on our webinar right now. Again, this is Vestrado. I'm Atomashi Dania, Vestrado's Global Market Analyst. Great to have you here, whichever part of the world you're joining us from. Today's topic, making consistent income with complex reversal patterns. Making consistent income, trading complex reversal patterns. Now, this is very easy. You see, many times traders have always had, veteran traders have had problems navigating through reversal patterns and trying to make good money from it. Now, let's see if we can try to solve that problem today, ladies and gentlemen. Let us see if we can solve that problem today. Stay tuned. Again, welcome. Making consistent income, trading complex reversal patterns. So, what are we going to be studying? We're going to be looking at what complex reversal patterns are, and then a simple strategy trading only complex reversal patterns. Okay? A simple strategy trading only complex reversal patterns. All right. So, let's get right on it. Let us get right on it. First, let's try to map out what complex reversal patterns are. What are complex reversal patterns? Okay, it's important to oh, I see Ojekpa Major, I'm ready for tonight. Oh, great to have you. Great to have you. Ojekpa Major, welcome. You can ask your questions anyway. This is a live webinar for the veteran traders in the house. Um, this is an opportunity to ask any question you like. Okay, so first off, we'll look at what are complex reversal patterns. What are complex reversal patterns? We need to have a proper lowdown as to what this is, okay, before we go further into this. Now, let's try to have our context straight right here. There are a couple of them. Some analysts will say that there are about, say, 8 complex reversal patterns, but I find that there are perhaps maybe 5. Okay, 4 or 5 effective ones that are mostly applied in the markets quite frequently and very commonly. So let's look at the list of complex reversal patterns first of all. Okay, first let's look at the double top and double bottom. Okay, next let's look at the triple top and the triple bottom. Okay, and then the next on our list will be the head and shoulders, and inverse head and shoulders, and inverse head and shoulders. And then last but not the least, I say the 1, 2, 3 reversal pattern. The 1, 2, 3 reversal pattern. So these are the major um, complex reversal patterns I want us to look at today. Okay, these are the major ones. We got the rising and falling wedge, okay, that could act as complex reversal patterns. Some could say maybe cup and handle acting as complex reversal pattern. Great to have you here, Mr. Frank. Great to have you here, Mr. Frank. Welcome. This is beautiful. Uh, so before we look into all this, it's important to have a general idea as to what complex reversal patterns present. Okay, what do they tell us? You see, I always tell my students complex reversal patterns tell a story. Okay, complex reversal patterns tell a story, or if I may, tell 2 stories. Okay, some people looks like some people are trying to join here. Okay, good. Wonderful traders in the house. This is how to go about it. Empty your bucket, learn and learn and learn and relearn. Okay. As always, good to have you. As always, let's get the link out for these people who want to join up. Okay, so as I said, complex reversal patterns tell a story, or if I may, 2 stories. Okay, first, we got to look at um, story number 1. They tell us, they help identify complex reversal patterns, help do the following. 1, help identify support and resistance. Help identify Leave your comments, ask your questions. I'll see them, I'll respond to them. Don't be shy. Help identify support and resistance. And two, they tend to tell us, give us, or map out a zone of equilibrium. Okay, they help to map out zone of equilibrium. All right, this is what they do. How does this work? I'm going to give you examples in a bit. Let's put this right here. Again, the first five we're looking at are double top, double bottom, triple top, triple bottom, second, heads and shoulders, the inverse heads and shoulders, and the 1, 2, 3 reversal patterns. And then complex reversal patterns help do the following. They help tell us or identify support and resistance. If you were in our basic beginner training, I said something. I said there are 5 ways to assess support and resistance. Okay, there are 5 ways to assess support and resistance. And I did say something. I said, oh, sorry, I said one, using complex candle patterns. And this is it. If you're on that training, you remember I said this. It's not magic. You see, the charts always tell us a story. Okay. What's left for us to do is to try to identify what stories the charts are trying to tell us. Now, let's use the double top and double bottom as an example. Okay. Let's use the double top and the double bottom as an example. So let's go with this. Good. So imagine that we have this in price, right? Let's put this here. Good. So we got this. Maybe this is too thick. Yeah. Beautiful. So we have okay. Imagine price traveling all the way, hits a high, reverses, okay, gets about the same high again, and then reverses. Now, of course, so yes, I'm going to show you all this on the chart. Now, what is it telling us? First, we've identified zone of resistance. Next, let's look out for the zone of equilibrium. Where is the zone of equilibrium? Right here. Right here. So between the high and the valley of the double top pattern, we have the zone of equilibrium. The zone of equilibrium. Okay? The zone of equilibrium. What does that mean? It's a region where we know that the buyers and sellers are indecisive between that range. Okay? Within that range, the amount of buyers and sellers in the market are about the same. Are about the same. Okay? Equal buyers. Maybe we have an imperfect Marubozu right here, breakout. This automatically will be the period of entry. Okay? We're supposed to sell right here. Sell. Because a breakout as a call. It means that we have more volumes um, um, in the way of the sellers. So in this case, in this uptrend, the double top is telling us there's going to be a reversal down. The breakout is supposed to happen right here, and this is called the neck. The distance between the neck, and The resistance region here is the zone of equilibrium. Now, this also gives you the idea of where to set your stop loss. In our Abuja conference, one of the traders came on board and said, okay, asked the question, one of the traders, where do we set our stop loss? It's very simple. Okay. Most times you can draw an halfway line, okay, between the resistance and the support border, and then set your stop loss right here. That's what usually happens. You can also set your stop loss right here, depending on your strategy and depending on the patterns you see when the breakout occurs. Now, if price happens to break past the resistance border, it will mean that it's forming a zone of consolidation and is trying to go up. This is double top. So I'm going to quickly break down all this into resistance, support, and the zone of equilibrium. Let's try to get this on board. So first we look at triple top, triple bottom. Let's look at triple top. 1, 2, 3. Okay, what do we have? We have resistance here. We have the neck right here. And this is the zone of equilibrium. Okay, between this guy and this guy. Now, if price breaks past the neck significantly, going down, we could see this as a selling point. Now, let's go for heads and shoulders. Heads and shoulders. So imagine this. Left shoulder, head, right shoulder. Now, again, this tells us there's resistance here, and then this is the neck. So you have two zones of equilibrium, but majorly one between the head and the area of the neck. That's what happens. Now, if price breaks that significantly, we should get what? A sell. 1, 2, 3 reversal pattern. 1, 2, 3 reversal pattern. How does that work? Look. You got this? 1, 2, 3. 1, 2, 3 reversal pattern. And then here, between here and here are zones. Zone of equilibrium. Okay. And this is the neck. Entry is right here. Entry. It's the same sense all across board. Okay. If you go by the reverse, maybe inverse heads and shoulders, you got something like this. You got something like this. Ask your questions. You got something like this. Okay. Zone of equilibrium. And then the breakout happening right here. That's what they tell us. Now, how do we apply this on the chart and try to get consistent profit from this? This is the real deal. Now, look. So in order to apply complex reversal patterns, my opinion is this. It is best not to apply it alone. It is best not to apply complex reversal patterns alone. Okay. One way to apply it in the market, regardless of whichever time frame, whether you're a scalper, day trader, or swing trader, they are very useful. Now let's look at some simple strategies right here. Some simple strategies. One, identify, we need a zone or an area of support or resistance. Area or zone of support and resistance. I'm going to give you live examples right here. Next, we want to see RSI overbought or oversold levels. Okay. Some prefer to look for RSI negative divergence. It's your choice. Now, these are simple strategies. Now, the next is, say you want to see the complex reversal patterns that we talked about. Complex reversal patterns. All right. Then you want to see breakout of neck or complex reversal pattern. Okay. Or trend line. All right. Or previous significant swing low or swing high. The surest among these three is this, the breakout of the neck. That's what you want to look out for. So the next strategy here is, say you're looking for volumes. You're looking for volumes in the market. Presence of volumes. Presence of volumes. Okay, this is very important that many traders fail to pay attention to. So say if you map out all these 5 points as a scale on your strategy. For me, okay, if I'm trading as a swing trader or day trader, I like to see 3 days trend, long trend of 3 days on 1 hour chart. All right, at least long trend of at least 3 days on 1 hour chart, and then long trend and 2 weeks. Yeah, long trend of at least 2 weeks on the 4-hour chart. So this is what I like to see. All right, this is not important. This is my preference, for instance. Right, as a scalper, definitely you don't want to look at all the length of the trend. I say you just want to see where there's zone of consistent support or resistance. If this is how you want to trade or attack the markets while trading complex reversal patterns, remember our highlight in this strategy is the complex reversal patterns, okay, and the breakout of the complex reversal patterns. That's what we want. But before we have that, we want to see some things, and then we want to see some things after. It's a simple strategy across board, okay? Very simple strategy. Even if you're a scalper, you're waiting for short trades on 15, 5, and 1 minute charts, you still want to see complex reversal patterns. I rather see complex reversal patterns for reversals than looking at simple reversal patterns like the hammer, morning star, evening star, and so on and so forth. If I see one time hit a level, second time hit a level, form a place of equilibrium, which is like a consolidation level, okay? If it breaks past that level, I want to see all these things I've mapped out for you. So if you have these 6 pink cows in your pocket, in your notepad, in your phone, mapped out as a strategy for trading complex reversal patterns, you're doing well. I see many traders who just do complex reversal patterns. They spot them and they start entering. Maybe those are big dogs. You could combine the complex reversal patterns with RSI or Bollinger Bands or MACD. Your choice. There are many indicators in the market. However, um, a simple strategy I'm giving you today is to look for area of support resistance first of all, RSI overbought or oversold levels on whichever time frame you're looking at, RSI negative divergence on whichever time frame you're looking at, complex reversal patterns, breakout of the neck, presence of volume. Okay, and sometimes you might want to look at the timing: 3 days on the 1 hour, 2 weeks on the 4 hour. So that's how it is. It's a simple strategy. Welcome, Mr. Adebayo Maruf. Welcome. Great to have you. So that's how it is. Really, trading is sweet. In fact, sometimes when you become consistent, you ask yourself, but I've been stupid though. Trading is the whole thing is stupid. Wait, do I just have to wait for all these things and enter? That's it. So I just have to wait for all these things on lower time frame, scalping, day trading, or swing trading, and maybe, and I'm going to capture at least 1%, 2%, 5%, 10% of my portfolio, depending on what I'm trading, which lot size. Very easy. The problem with trading is mostly psychology, learning when to wait. If you wait for all these simple strategies, you wait for these simple points, simple events that happen in the market, you will definitely make profits. If you wait for them every time you enter, you don't just jump into every trade, every opportunity you see. You want to see all these. Now let's talk about the presence of volumes. Presence of volumes, say you want to see a Marubozu, or you want to see twice the length on volume analysis indicator, twice the length on volume analysis indicator, or you want to see some sharp movement on moving averages, your choice. Okay, I for one like to wait for volumes in the market. I'm going to give you short-term examples today that we use on our Telegram channel. If you are not on that Telegram channel, sorry for you. I sent outlooks on USDJPY advising to sell based on reversal patterns I saw. What did I see? Double top, 1 2 3 reversal pattern on USDJPY on the short term. And what happened? We captured 3 or 4 take profits. And what did I say? It was looking strongly bearish. When we talked about Euro AUD, Euro NZD, Euro GBP, no, GBP NZD, look for those pairs on the Telegram channel. What did I say? First, I spotted, I'll show you heads and shoulders, the Elliott wave pattern, double top, and then we had 4 take profits back to back on almost each one. Imagine seeing that 3 times in a week or 4 times in a week. You're doing $400, $300, and boom, you already have 25% of your portfolio. Is if you only learn to wait, it's so simple that you start to think maybe you're very stupid. How can I just wait for all these things so stupidly, so simple, and I'm making some money? But it's easier said than done because the act of waiting itself is another journey for many traders. The act of waiting is a journey on its own. Learning to wait, learning not to be greedy. Trading will test you, trading will push you, trading, okay, will teach you to be disciplined, will make you mature at a very young age if you start early, okay, will test you. It will test your greed. Many a times, if you stick to a simple strategy like that, and I always tell my students, the simpler, the better. The simpler, the better. Keep it simple when analyzing the market. Ask your questions. If you have any, I'll answer them. Okay, use the chat box. Welcome, everyone. Now, so this is what we have. It's as simple as this. Now, let's go into the charts while I give you some live examples here, and then we're going to round up the session today on complex reversal patterns. Let's try to look at the charts and then map practicalize Everything we've done so far or discussed so far is simple, really. Okay. Okay. Next. There you go. Let's look at the charts. Let's look at some examples of what we saw. Okay. First, live examples right here. What did we see? I want to take you to the Euro NZD, GBP NZD to give you some examples of um, complex reversal patterns we spotted. What did we see? What informed us that this guy was going to drop? Look, daily chart. Okay. 4-hour chart. What did we see? 1, 2, 3. So I'm going to map that out. Head. Okay. Now, mind you, it's still forming. It's gone back up into the range again, but the short movement is just done. The brief drop, we've been able to capture some money. Now, head, left shoulder, and then if you may, quite close, yes, you can still call this the right shoulder. What did we do? In this case, it's quite tricky. You might want to call this guy here the neck. Okay. But if you notice the strong bullish pressure of the trend, that's another topic on its own. Okay. You're going to map out your neck this way using the significant swing lows. And what did we say? We said at the break of this level, we should sell. And that's exactly what it did. We captured about 4 take profits on this guy. Heads and shoulders. What did it tell us? Zone of resistance right here. This is resistance. I'm going to map that with the blue line. Okay. So we have another zone of resistance right here. All here, resistance. So the first step, what did we say? We said zone of previous support or resistance. Let's look at the daily chart. Okay. It reached new highs. Which particular high? Which particular high? A psychological level. 1.7400. Now, if you remember the beginner training, I said one way of assessing support and resistance is psychological level. So this guy touched the psychological level of 1.7400, went as high as 7415, okay, and then started to form the heads and shoulders pattern, which we see here. The question will now be next step. Was it overbought? Nicely overbought. Markedly above the 70 watermark right there. RSI overbought. Nicely. Is there divergence? Is there negative divergence? Look, you can't beat this. Price is telling us uptrend. Uptrend. The RSI, okay, is flat. So if price is telling us uptrend, RSI flat is still negative divergence, but weak. There's some sort of weak negative divergence. So you have it. It's present. So let's take that away. We got long trend, right? How long was this trend on the 4-hour chart? Of course, you don't have to wait. If you're scalping, it doesn't have to be this long. You don't have to wait for so long. Okay. So long as you have your zone of resistance and support. Look at it. Right? The trend ended right here. How long? 20th of February till 12th of March. Over a month. Over a month. You can say, okay, it's too long. You don't want to scalp, but you don't want to wait for something too long. Okay, fine. If you can't see it on Euro AUD, go to GBP USD. If you can't see it on GBP USD, go to Euro USD. If you can't see it there, go to USD JPY. The Forex market has got lots of pairs. And this strategy I've given you is not a strategy that is effective only for Forex, commodities, stocks, indices, and so on and so forth. So we've seen zone of resistance, psychological level 7400. We've seen RSI overbought. We've seen RSI negative divergence. Now, what are we looking for? The patterns. The patterns. Complex reversal patterns. Again, left shoulder. Again, left shoulder. We got the head right there. Right shoulder. Very beautiful. If all you do is wait for all these simple strategies, wait for this simple strategy with these 6 points I've given you in the market. If all you do is wait for that, I assure you, you make some good money. Now, breakout of our trend line right here. That's what we said. Okay. When we went to lower time frame, when it broke out here, we advised a sell. It broke below our 200-day moving average. Another breakout strategy. Now, volumes. Which volume did we get? Zone of volume. Now, that's the next step. Volume analysis indicator. What do we have? If I zoom in, at the place of the breakout, right here, okay, where the red line is, it went back up to retest our neck level and then came back down again. So we have two breakouts, 1 and 2. What do we have there? What do we have there? Let's look at the bars on the volume analysis indicator. Very long. The first breakout, what happened? Look at price before the breakout. Look at when the breakout happened. And look at when the second breakout happened, almost times 2. If that's all you do, okay, wait for the breakout. If that's all you do, using the volume analysis, fine. Now here we don't have the Marubozu, but guess what? As it kept going down, struggling to break below the 200-day moving average, right here. Let me give the 200-day moving average a different color. I'll give it the green line. It struggled to break down the 200-day moving average. And when it did, it formed something similar to an imperfect Marubozu candle right here. Some people will enter here. Others will wait to enter right here. This nice candle here, let me highlight that. So you got this guy right here. Others will wait to enter here. Some would wait to enter right here. It's a matter of preference. But they'll be both in the right. It's as simple as that. It's as simple as that. And what happened to price? Nice drop. Remember, this is the 1 hour chart. So if you entered right here, between here and here, let's look at how many pips we would have captured. Between here and here, that would have been, yeah. Oh my goodness. That's about 100 pips. That's about 100 pips. Some people enter the markets looking for just 20. On this alone, 100 pips. On a standard account with one lot size, that would have been $1,000. That would have been $1,000. Now that's for the heads and shoulders. Let's look at other patterns right here. What else did we see? GBP NZD or maybe the Euro NZD. Beautiful. Another heads and shoulders pattern. Head, left shoulder, right shoulder. And then look at our zone of equilibrium. Not our zone, our breakout, our trend line breakout. Our zone of equilibrium will be between here, here, and here. Right here, the neck. You could still call this swing low another neck level. So we have two neck levels, 1 and 2. When price broke past the trend line, what did it do? It did so with a perfect Marubozu. Volume, long trend, first step. Look, from 21st of February up until 11th of March. More than a month. If you say it's too long, apply it on the 5 minutes chart, 15 minutes chart, 30 minutes chart. If you don't find it on Euro NZD, check other pairs. Heads and shoulders. So the simple strategy is at the breakout, what do we have there? First, we've identified long trend. Second, resistance level, 1.9150 psychological level. 9150 is a psychological level, okay, on price. It hit that level, It broke past 1.9100, first psychological level, hit 9150, second psychological level, that's the resistance, form the complex reversal patterns, heads and shoulders. Is it overbought? Let's check. Was it overbought right there? Definitely. There's nothing you want to tell me. Look at it. Nicely overbought. Was there divergence? Yes. Follow the line. If you connect the lower waves on price, on the RSI rather, and also connect the lower waves on price, what do you have? Divergence. Price is telling us up, following this line right here, and then the same line connecting the same waves on RSI. Price is telling us is going down. So let's look at our strategy. Long trend, yes. Resistance level, yes. 9150 psychological level. Heads and shoulders, complex reversal patterns, yes. Overbought, yes. Negative divergence, yes. On RSI, you could use the Bollinger Bands, use the MACD, whatever. There are many indicators on the platform. Trend line breakout. Let's extend our line here for trend line breakout. Right there. How did it break? It broke with the Marubozu. Right here. Nice, perfect, bullish, bearish candle. Marubozu candle there. If you don't know what the Marubozu is, Google it. That's a way of telling us there's large volume in the market in favor of the sellers. So remember, we had two necks. This is our first neck. Let's give that color yellow. And this is our second neck. You already have take profit levels, target levels to work with. Okay? Take profit levels and target levels to work with. The Marubozu candle is a way of assessing volume. If it does so strongly, you know that the bears are strongly in the market. If it's a bullish Marubozu candle, the bulls are strongly in the market. It broke past it here and then went strongly bearish, hit the first neck level, the yellow line, went back up to retest the trend line. You see how we're working. So many support and resistance levels right there. Broke the trend line, hit the first neck level as take profit, went back up to retest the trend line, and then came back down again. And when it did, it broke below it significantly here to continue just going down. Look, it kept going down and then broke the second neck and then continued going down. You can't miss it. How many pips at the period of the breakout? From the place of the breakout, 8986 to where price reached. Shit. Excuse my language. That's over 250 pips. If you're a swing trader, you don't have time, 9 to 5. Place it and just go. But wait for the volumes. I always tell my students, wait for volumes. It's not difficult. Ladies and gentlemen, that's the heads and shoulders. Now, there's something else we saw on this guy. I gave signals on this guy, outlooks, to capture good profits. We saw the Elliott wave pattern. We're going to talk about the Elliott wave pattern in another webinar. You better stay tuned for that. And there'll be more people joining us on that webinar. So this is just the beginning of a beautiful cycle or season of webinars and trainings that have been effectualized, okay, drafted to give you better knowledge as a trader. And also give you the opportunity to ask questions in the chat section on the YouTube Live. You don't want to miss it. Many people pay for mentorships. Okay, my last mentorship fee pay was about $500 a month. In some climes, in some countries of the world, it's a lot of money. You have this experience, you have this opportunity right now on YouTube to ask your questions to any question at all, whether it's related to the topic or not. Take advantage of it. So it's a cycle or a series of different webinars or lectures to come. Stay tuned. We're going to be having another one next week. So in continuation, we saw the Elliott wave pattern. And I always tell my students, many times Elliott wave patterns often appear, perfect Elliott wave patterns often appear as channels. Look, It's looking like an Elliott wave pattern on the 4-hour chart. But on the 1-hour chart, you can spot something similar to an ascending channel right there. An ascending channel right there. So that the breakout of the channel will give you a reference for entry points, as an entry point rather. There you go. And what happened? Broke it here with look, I love Maribozos. Broke it here again with a Maribozu, imperfect Maribozu, came down, went back to retest. You see how the channel we drew was acting like magic. Went back to retest the channel. And then when the retest was completed, formed an evening star with a very wide gap. We're going to talk about simple reversal patterns like that, how to apply them with complex reversal patterns. Formed an evening star with a very wide gap, and then woof, et voila. We had all take profits captured on this guy. All. It's on the Telegram channel. Go check. So this is it. Okay. If you happen to go through this video again in the future, go back, listen in. You can copy those strategies I've given you. Of course, I have other strategies. For example, in there's a moving average early signal. There's a Bollinger Band early signal I like to give. But I like to reserve that for those of us who've got accounts with us, for those who've got accounts with us, or those my personal students. Okay, so I can share one strategy with you. This is one strategy. Apply it. If all you do is wait, Monday, Tuesday, Wednesday, Thursday, Friday. If you want to trade crypto over the weekends too, davai. I guarantee you consistent profits. If all you do is wait for this simple strategy, applying the complex reversal pattern, consistent profits. Be it as a scalper on lower time frame, be it as an intraday trader trading your 30 minutes and 1 hour chart, or a swing trader doing your 4-hour and daily chart. Now, some might ask, what's the region of setting your stop loss? In this case, look, we've had the channel drawn. We have a reference point. Price broke it. Price went back into it. If it goes back into the channel significantly, okay, then I could put my stop loss right around somewhere around here. Okay, the next significant swing high after the break. Because when volumes happen like this, look at this nice bearish candle. When you have such strong volumes, it's rare for price to go back to the swing high again. For example, if it broke it going down, unless you have news. That's why I tell my students, avoid the news if you want to trade. It's not compulsory. And if you have to, use low to moderate lot sizes. And there's another beautiful concept of risk management that I want to let you know. Hedging. I see that many traders have got no experience pertaining to hedging. Many traders don't know how to hedge, and they've been in the markets for years. How? Hedging is an important part of risk management. In fact, hedging is a way of turning your disappointment into your blessing, into a blessing. Very beautiful. There's no position I will place throughout the course of the week. I could hedge like 4 or 5 times and come out on top because in the hedging position, I've captured more than my initial position. If you were hedging, you probably will want to move your stop loss level higher. Because if you've seen this, this is a morning star with a gap. On lower time frames would have appeared something different. You would have known that this guy, he broke the range of the bear here. This bull broke the range of the bear. It was already indicating that there's a strong possibility that it will go back to retest the support border of the channel. Another way to tell is using moving averages, early trigger on 1 minute or 5 minutes, and seeing the bullish change of pattern. We'll study the bullish change of pattern on this channel. Stay tuned. Okay, the bullish change of pattern. All right. Let's mark that. Let me show you what I mean. So if we have a rectangle right here, 5 minutes chart. Let's see if There you go. We're looking for the bullish change of pattern. There you go. See, you can't miss it. One, two, three reversal pattern. Nice gap. Okay. Nice gap right here. I'm not going to tell you that gap. We're going to study that later on. Stay tuned. With reversal patterns, simple reversal patterns, keeping up. One, two, three. Breakout of the one of point two. You knew that seeing this on lower time frame, you could easily tell that price was going back up to retest the support border. If I were you, I'll set my stop loss right up there. But seeing that it's going to go, I'll just hedge my position. Place a buy position contradicting the sell. So I'm capturing profits going up. When the retest is successful and it's coming back down, I'm capturing profits coming back down. Now let's round up with something a bit more recent. I sent an outlook on the USD JPY. I sent an outlook on the USD JPY. What did I see? Look. This is it. So I saw other things, but I just want to lay it out there for you based on the topic we're doing today. Double top. All right. It's somewhat double top. Let's move this away. Double top right here on 5 minutes chart. Like I said, you want to apply it on scalping. Davai. On lower time frames. Go ahead. Somewhat of a double top right here. Okay. The zone of the neck. This guy right here. Price broke past it, went down, and then I saw bullish change of character on the 1 minute chart, and I said it could go up. Then what happened? When it went up, it formed the 1, 2, 3 reversal pattern. One, this now became one, this swing high. Like I said, you can apply the pattern scalping. Apply the complex reversal pattern scalping. Your choice. 1, 2, 3 reversal pattern. Ladies and gentlemen, let's map them out. We're rounding up very soon. This is our last example. 1. Yes. Next we have 2. 3. 1, 2, 3 reversal pattern. You can't miss it. You really can't. And what happened to price? This is the zone of the breakout. Confirmation level. There's something called confirmation level on the 1, 2, 3 reversal patterns. That's point 2. When price broke past that significantly, look at how nicely it went. Nice bearish drop. I sent this as an outlook on Telegram. Check it out. USD JPY. Nice break. First, was it a long trend? Relatively speaking, pertaining to the 5 minutes chart, it's a long trend. Started from here all the way up. Was it overbought? Was it overbought? Yes, nice overbought level right there. Okay. Was there divergence? Yes. If you connect these two lows, the swing lows on price and the same lows on RSI, negative divergence. You can see how it's playing out. Now, the zone of initial support, zone of initial resistance rather. Look, on the Telegram channel, I drew something for you. I said price moved in a channel. We captured profit already yesterday. The zone of resistance is 4965 here, right here, trying to retest the support border of the channel. So number one, is there zone of resistance? Previous resistance in the past? Yes. It was trying to retest the support border. So the support border of the channel was acting as resistance. That's this blue line right here. That's one. Second, was there overbought levels? Yes. Nice overbought level right there. Nice overbought level. on RSI. Is there divergence? Yes. RSI negative divergence. We drew that. Okay. Was there breakouts? Was there complex reversal pattern? Yes. 1, 2, 3 reversal pattern. Was there a breakout? Yes. Breakout of the confirmation level on the 1, 2 reversal pattern or the neck level, and breakout of the trend line. So early entry. One of the speakers in our Abuja conference, if you were there, said something. He said, I don't care what type of strategy you have. Um, these are candlesticks. Yes, Frank Nigo said, please give example of reversal patterns using only candlesticks. These are candlestick patterns. I've given them, maybe you joined late. I gave 5 examples. They are all candlestick patterns. 1, 2 reversal pattern, double top, double bottom, triple top, triple bottom, heads and shoulders, inverse heads and shoulders. So after the live, you can go back and listen in. Those are all candlestick patterns, Mr. Frank. So early entry in this case would have been enter here. I may have been able to enter here. Okay, there are other things I see here which I can't explain to you right now. It's not today's topic. Early entry would have been from here or at the break of the trend line. So breaking the trend line, in breaking the trend line, my first take profit is the neck level of the 1 to 3 reversal pattern. And when it broke the neck level, what happened? An imperfect Marubozu. Let's take this away. Volume. Was there volume? Yes. Look at that. It did so with an imperfect Marubozu. Hit the neck level, broke the trend line, hit the neck level, broke the neck level with an imperfect and perfect Marubozu. These 2 candles right here. You can't miss it. Signifying huge bearish volumes. Now, if you like the volume analysis indicator, there are other indicators for analysis, for volume analysis rather. As at the place where we got the breakage with the Marubozu, if you trace that down, there you go. What happened? At the period of the breakage, this is the lowest volume. Okay, almost times 2. The volume increased with the Marubozu happening. And after that, price kept moving up stepwise, in stepwise form. But if you're a price action trader, you won't even want to worry about volume analysis. A more reliable analysis of volumes in the market is the shape of the candle. If you have a perfect or an almost imperfect bull or bear, it's an indication that there are so many bulls in the market or so many sellers in the market. And we have at least a 70 to 80% probability there's a one direction of price. And that's exactly what happened right here. 5 minutes chart, scalping strategy. We sent it in the morning, 3-4 hours after, 4 take profits or 3 take profits captured. You have no excuse. You got to make money. Trading is sweet. Okay, ladies and gentlemen, thank you for joining us today. This is the end of our live session. It was great to have you. Complex reversal patterns, we listed about 5 of them. Okay, you can go back, listen in. It was great to have you. We're going to be having another webinar next week. Invite your friends, come aboard. Okay, come listen in, ask your questions in the live chats. Mr. Frank, Mr. Adebayo, great to have you. Ojekwa Major, great to have you. Ask your questions, okay, when you come on board. All right. I'll see you again next week. As always, I'm Atomashi Dania, Vestrado's Global Market Analyst. All right. Remember, whatever you do in the market, the trend is your friend. Okay. And